If you have a pension, you are not playing the same game as everyone else. In fact, your pension could allow you to take far less risk, or more risk if you want, than a typical retiree, and still sleep like a baby. So let me tell you why. Hi, I'm Zach Lundak. I'm an hourly financial planner. A pension is basically like a bond. You get fixed payments every so often. So when you think about your overall retirement portfolio, your pension is effectively like a bond allocation. Here's where it can get interesting. You can actually calculate the net present value of your pension, just like you would a bond. Let's say your pension pays $60,000 a year. For life, depending on your age and interest rates, and if it's inflation adjusted or not, that pension might represent the equivalent of $1 million portfolio. So even if your investment accounts total $1 million and they're 100% stocks, with the pension, you might only have a 50-50 allocation. If you're naturally conservative, you don't need to chase big market returns. Your pension might cover most of your income needs. So your investments can sit tight with very little risk. On the other hand, if you're more aggressive and you have big goals, you can lean into stocks because short-term losses won't hit your lifestyle in the same way that it would for a lot of other retirees. That's the real reason that retirees with pensions sleep better. They know their floor is covered. Now, one of the biggest choices you'll face is how to take the pension. Do you choose a single life payout or a joint and survivor option? Here's how I want you to think about it. Choosing a joint and survivor option is essentially like buying a life insurance policy. You're paying for the guarantee that your spouse continues to receive income if you pass away or not. But here's the thing, if you're retired with a portfolio, with Social Security and other assets, you often don't need life insurance at all. So what's the right call? Run the math. Look at the worst case scenario. Be dying day one of electing your pension. How much value would you leave on the table? Compare the cost of buying a term life policy that is equivalent to the net present value of that pension if you died on day one. In a lot of cases, the math shows that a single life option is more efficient, especially if you don't need more insurance. But every situation is different and it deserves a careful look. There's also a huge psychological difference between having a pension and living off investment accounts. With an investment account, you see the balance every day. And when the market drops, it's natural to feel anxious and tighten up your spending. That fear often causes retirees to underspend their assets in retirement, even when they could safely enjoy more. But with a pension, you never see the market swings. All you see is a steady paycheck. It certainly makes retirees feel more confident in their spending and enjoy retirement more day to day. Of course, there's a trade-off. In the early years of retirement, when you might want to spend more on travel and other big ticket items, the pension doesn't give you that flexibility that investment accounts do. Once you choose your payout, it's locked in. So while pensions reduce anxiety and can make you more confident in your spending, it's also going to limit your ability to front load retirement expenses. A pension doesn't just provide peace of mind, it reshapes your asset allocation strategy, impacts how you think about life insurance, and changes your psychology around spending. It gives you options and stability that retirees without a pension simply do not have. If you're thinking about retiring in 2026, you need to watch my other video on the ACA premium tax credits going away. That potential change could add tens of thousands of dollars to your health insurance costs in the next few years if you're not prepared. And if you're a DIY investor using Bolden software to plan your retirement, check out my playlist here where I show you how to use the software efficiently and avoid common mistakes. Like and subscribe.